Good morning. This is Monty. We haven't done a podcast in a while, so I thought I'd chime in and do a podcast. After all, after you pay so much money for these services and these apps and different things that we use to promote our businesses, to get the word out on Bitcoin, cryptocurrencies, etc., you always want to go back and use these tools to make sure you're getting your money's worth. Anyway, this platform is just one of the different tools that we're paying for that I almost forgot that we even have. So might as well use it, right? So getting right into it. This particular podcast is called Traditional versus Crypto Economy. And basically, what that refers to is the idea that we're seeing a dichotomy, if you will, where we have two different economic systems almost that are currently intertwined. But I think more and more as we go forward, you're going to see a lot of decoupling of the crypto space and economy versus traditional fiat based, mainly because, as you guys all know, one of the main distinctions that we Bitcoiners like to point out is that we don't care so much about the quantitative easing regimen that's instituted in the traditional space. Well, when you have the capability of printing money, that does a whole lot to defeat the whole purpose of equitable monetary distribution of the very fiat that people use on a daily basis. So, because money is so essential to our daily lives and it impacts so many different things, that's one of the main tenets that you don't want to affect or disrupt or devalue. Okay, so in the crypto space, just to reiterate, that's a no-no. And also, going forward, before I forget, one of the things we always have to take a look at is what are the shortcomings of having a very old, antiquated system that is not that easy to upgrade and bring into the future. In other words, programmable money, the portability, for instance, the open source nature of Bitcoin and cryptocurrencies is such that you can change it. It can adapt to the new regime that we're looking at now. In other words, what does it mean to actually travel with all of your wealth, all of your assets? What does it mean to leave others something of value that can be confiscated? The tax system, for instance, in the United States at least, is a voluntary system, and we're supposed to be able to leave our children and our future generations, progeny, something, if we so desire, without it being taxed out of existence. So that's one thing that we need to take a look at in terms of one of the major differences: my ability to leave great wealth to my offspring, to whoever I so choose, right? And with the current regime, whereby other taxing authorities and such have more to say about what we can leave and what we can't, even in a voluntary system. That's not the way we want to operate, right? Because if you have great wealth to begin with, then you can pay enough lawyers and accountants and financial planners so that you don't have to worry so much about the taxing capabilities. Where at the same time, roads and bridges and highways and communications infrastructure, all these things, transportation systems, they have to be built, and that money has to come from somewhere. So we don't need a bunch of very wealthy people skirting the system, not contributing their fair share, but at the same time stating that we need a tax base and somebody should support it, but we're not quite sure how to impose it because a lot of people are escaping it. Some don't have to comply, some do, and it's just a piecemeal, melancholy patchwork system. And in the crypto space, again, dealing with programmable, open source, algorithmic a system whereby it can basically be changed and fitted. For example, going forward, we're going to see time-based micropayments that have more to do with charging us or billing us for very specific micro intervals of usage. As a practical example, when you pay for car insurance, the amount of time that your car is sitting in your garage is not exactly on the road. So why not have micropayments programmed into a smart contract so that the amount of time you're actually on the road, if it's 5 minutes or 5 hours, that's where you pay car insurance. If you're a content publisher or creator, why not charge people per paragraph, per sentence, per sampling of music? If you're a musician, why not charge for the amount of time you actually view a movie? If you review a movie and you don't like it, and you've only watched 5 minutes of it or something, then why not charge specifically for that time interval? So I think going forward, we're going to start to see how much of an advantage that we will have with the implementation of cryptocurrencies as compared to what we have in the traditional finance space, where you pay some stupid cable company a certain amount of money per month, whether or not you actually use the service all throughout the month. Maybe with the cryptocurrency programmability implementation, we'll be able to have Netflix, have HBO, have whatever the service is, Amazon's Prime movies or something, and when you actually log in and look at the movie, that's when you'll be charged for the viewership for actually viewing movies. So there's a number of different things that definitely need to be looked at and changed. We can't even imagine. I can see machines billing each other because if your car is parked normally in the traditional system, fiat system we have now, cars sitting in parking lots are underutilized assets. But there's nothing wrong with having a car outfitted with a smart contract programmed into its computer system that allows it to be autonomous and drive around and pick up other people while you work. Then when you get off work, the car comes to get you, and maybe you can have your car make money for you by hiring it out. Considering that it's autonomous vehicle, or will be autonomous vehicle, as most vehicles will be in the near future. So cars will be making money for you, and maybe those cars, maybe these machines, maybe robots at hotels and motels will clean rooms and pay taxes. If the tax base is eroded because so many jobs are automated, well, somebody's got to pay taxes, right? Somebody's got to pay into healthcare and education. We want everybody to be healthy. We want everybody to be intelligent, hopefully. So maybe robots can pay taxes, and that way humans can actually exercise their talents and their skills. Their creative potential will be get a chance to flourish. So there's a number of different things that I think we have to look forward to as we evolve from this stagnant, antiquated system that we call the fiat system, where countries are manipulating their currencies on a daily basis. If China wants their currency weak, the United States wants their currency strong, or vice versa. They just go and print out money, and they just go and lower the value or raise the value arbitrarily, and the citizens don't have anything to say about it. They don't have any input or say so at all. These things are inequitable. In other words, we want to have a stake. Each citizen, each person should have a stake, a say so, something to do with how the country is actually being ran. And in the fiat-based system, you don't. But I think in the cryptocurrency space, as a lot of you found out, contentious hard forks and such, the whole community chimes in, and things get bogged down in discussion and debate as they should, and you go forward with the best implementation. So there's going to be a lot of things that are going to change. You can join in, you can be left out, and there's a lot of things that are going to actually produce a more equitable situation again, where we'll get a chance to figure out how are we going to address when AI and robotics and such start really decimating more and more jobs, and people hopefully will be able to make a transition to things that are more creative, more artisan, where you turn your hobby into a business, or just concentrate on your hobby, because we hopefully will have more machines and robots and different things do the manual labor, do the boring, mundane jobs, while we focus on our creative potential, focus on athletics, focus on just using our brains more, and versus doing these routine jobs, putting widgets together, as I say, the widget makers. That'll hopefully be a thing of the past, and we'll be able to again concentrate on things that are more important, more creative, more indicative of our true talents. So anyway, I just wanted to chime in and not make it too long, but just take advantage of these tools that I have, the podcasts and different things to occasionally get the word out and use these services, get my money's worth out of them. So if you have any questions, concerns, or comments regarding anything that we discuss in the articles, mentioned in the blogs, put on the videos, go to our website, participate, comment, put your criticism, comments, compliments, whatever in there on the website, and let's start a discussion. Okay, the cryptocurrency space seems to have transitioned from crypto winter, what we call crypto winter, where everything is basically in a bearish type of sentiment, where people are basically not able to recognize any where things are just basically downtrending and not going anywhere anytime soon. We seem to have transitioned from that crypto winter into maybe a crypto spring, and maybe even going into a crypto summer, if you will, or bull market. So as we transition from what may seem like, as we transition from this bear market into maybe a bull market, I think a lot of you will want to take advantage, will want to find out, want to do some research, want to have some discussion so you can participate. Unfortunately, I think a lot of people in the traditional fiat system are going to get left behind, and they're going to be struggling at the ages of 50, 60, 70 years old, which is not very attractive when you're that old and you can't quite figure out how to make ends meet, because you didn't catch on, you didn't discuss, you didn't debate, you didn't show up at meetups, you didn't do anything to help yourself and your families make the transition that's going on right now. This is just like the internet, starting all over again. But you have the opportunity this time. You can participate. You don't have to be an accredited investor, invested in IEOs or IPOs or something like you did before. Now, the accreditation is gone out of the window. With the cryptocurrencies, you get a chance to get in on the ground floor, and Wall Street gets in behind us. This is the first time in history where the people who are investing in cryptocurrencies are retail people, and they get a chance to take advantage first, and then Wall Street came later. So this is what happened. We found out about cryptos early on, as I did in 2011, and a lot of us even sooner than that. So we got a chance to stake our positions, lay our claim to the Bitcoin territories, cryptocurrency territory, and accumulate ahead of Wall Street. Wall Street is just now really pouring in, but it's pouring in at a pretty good rate, and it's going to be exponential. It's going to be an exponential increase in terms of the assets that are going to be coming in from gold and real estate and commodities and the oil and the bonds and the retirement. All these things are definitely looking for yield. Everyone's looking for yield. Everyone's looking for return. So don't deceive yourself into thinking that there are good alternatives out there, because those alternatives are drying up. Go to my website. You'll see countless articles about hedge funds losing money, closing down. You'll see countless articles about the stock market and how many successive weeks and months that it's been declining. You'll see countless articles about corporate debt piling up, because The game is pretty much coming to an end. Tech stocks, IBOs, Uber, Lyft, and such, they've been very, very disappointing. So after so much of this, people begin to get hungry for yield, hungry for return. The rich millionaires and billionaires and such, they can't afford to sit around forever and watch the Bitcoiners and the cryptocurrency people make 10% a week, 15% a week, 60% a month. This is the best performing asset class in the last 3 going on 4 years at least. So at some point you got to use common sense. You got to figure money and mathematics go hand in hand. And when there's not enough supply and there's a lot of money chasing that limited supply, the catalyst is definitely towards the upside. Okay. So anyway, I wanted to chime in, make a quick podcast, and I'll put it on the website, and you can go in and share it and whatever you want to do with it. Anyway, I've got to get back to my household chores and minding my cat. Anyway, we'll talk later. Have a good day. Thanks. Bye.